Welcome back. It's Digital Real Estate. Thanks for stopping in, everybody. We got Bitcoin up here, 4 hour as usual. Things have broken out of our channel. We've tested our overall descending trend. What's going to happen? More on that in a moment. Please subscribe, hit the like button, and the notification bell if you want to see the content rolling in your favor. So here we go. Let's get started. Right away, into the content we go. Basically, we've now formed a new trend here outside of our overall ascending trend. If we close the monthly or weekly period under this line, we can look for further downside. The short-term period, we have a trend here starting basically descending or ascending, or excuse me, symmetrical triangle. We basically have a triangle forming here. If we fall below this line, we're going to look for a low to match our previous low of 39.5 that we set back in September. We're basically looking at a confirmation of a double bottom in the market. If we can hold there, then we can look for further upside to our overall target of 88,000. If not, we're going to set a new target back down here in the $30,000 range. Unfortunately, if you're still in a long position or if you're holding, you're not looking forward to that situation. So basically, this is your line of support here at this point, and if that fails, we're going to be looking towards the $30,000 range, and certainly going to, if we can stay at the 39.5, which we measured, if we break below this line, is where we're headed next. If that doesn't hold, then we're going in the $30,000 range. And just make that clear. As everyone said, we changed up our Fibonacci numbers here. We took the high and also all the way down to the low of 3,800 that we set back in March of 2020. We were basically looking at a 618 scenario on the retracement side of that. So, is it a bad thing? Not necessarily. We kind of already did test this area, so I don't really necessarily see us going there, but we didn't retest this area, as you can see in the chart. Once we got to that point, we retested this little downtick here, which was met by resistance from previous price action back in April, and then that got broken out, so then that got moved up to the next high that was formed. Once we broke down, then we formed that, and then we set that as the new area of resistance when we came back. Obviously, people were looking for maybe a drop down in this area to reposition based off of here. We didn't get as low, but we got pretty close. So congratulations to anyone that was able to kind of, weather the storm of the consolidation here and then enjoy the uphill and get out of the consolidation. Wait for confirmation and go short. So obviously in hindsight you can see all this now, but we can anticipate that here. So we would kind of basically see another consolidation period in this area like we did back here. Now it's probably going to be drawn out a little longer. That's why he gave us the 1 to 5 months to reach that overall target. We wanted to position ourselves down here, as I said, or below, obviously. But we want to wait for it to hold. And like I had mentioned, if you were getting antsy or just didn't feel you wanted to wait out much longer in the market, and I can understand that, then obviously you want to just kind of position yourself here along this line and then scalp out, because if not, eventually you saw what happened. We just kind of tumbled back through here with some of the news that came out regarding the mining of the network. So you can read those headlines yourself, obviously in Google. So our overall target currently in the short term is now 39.5. If our support line does not hold here, what we are looking to do is just wait for confirmation on this weekly period. So in other words, tomorrow the close is at 7 o'clock. If we do close above this line of around 41.8-ish, then we're going to look to add to the current position that we're in now, and basically look for a move going up to our $54,000 target. If we can break back into our wedge and then bust out of it, versus just hit resistance at 45 and then continue to come back down to find this double bottom. And if that doesn't hold, then we're going to see our 30,000. So that's where the market sits at the moment. We did see a breakdown of the channel, so I had mentioned that once we did that, I would come out with some information. So we did anticipate in the $43,000 range, based off of our trend that we set from here going down. We didn't actually measure until we got at this point, so our measurement was a little off, but also we didn't anticipate it taking this long, but we kind of set that breakdown in this area, so it measured down to about 43. We obviously broke below that. That looks like that's where resistance is now, in that range. So we really need to just kind of hold here and then make a decision if we're going to get in long, or if we're going to buy, or whatever we're going to do, or if we're going to sell because we're uncomfortable with the current state. I mean, that's obviously your choice. There's no financial advice here. What I'm saying is, what I'm seeing, what we're seeing in this chart, obviously, is a continued breakdown, and then hopefully we can finally find that support. The market is seeking out support. We obviously failed here in the $43,000 range, so now we're in the $40,000 range. We're looking for the low of 39.5 if we do not hold above this line by tomorrow. So if we close below here by tomorrow, then we're at 39.5. If that doesn't hold, then we're down to 30,000. If all of it holds up, then we're headed to 54, and then we'll head back down, maybe in the $43,000 to $45,000 range, and then start heading towards 88,000 as we get into, the end of this month and then into February. And I said it was maybe a 1 to 5 month process. I mean, depending on, what information or adoptions out there for us, and then we can push higher. But until we get some kind of clarity in the market and basically finding a bottom to where, the larger liquidity, that the high capital guys come in and say, okay, this is where we're going to put our money in. And that just kind of sets the floor for the market. I call it rock bottom because they have basically set the floor. They're going to sell before it goes any lower in most cases, or have, maybe a loss of maybe 1, 2, 5%. Then they're going to get out. So then it's even going to just make a more of a cascade effect, like we saw in March of 2020. When we did test this line, we're not going to go back into this video. We'll save that for another. But we did just kind of wick all the way down. It was just a cascade event because people were, fearful about what was occurring. So that's why we, had that ability to drop and basically find another double bottom in the long-term scheme of things. If you understand or know the market pricing, December of 2018 was our low of about $3,100. So now we didn't really test that low again. We just kind of consolidated through it for about a couple of months, and then it swung up and then found a high of 13.8. Then we came back down to test that $3,000 price range. That obviously held, and then we ascended all the way up to 12,500, broke back down to 9,800, and that was basically the point of failure. When we did break below that line, we were in that area, and then it just fell to 3,800. So we're just finding another bottom, if you know what I mean. And this is just on a shorter time period we're finding a bottom, because this is only a couple months, a few quarters involved. Obviously, 3, you have the end of the third, the end of the fourth, and now the beginning of the first. So again, I'm still looking for that kind of swoop back up. As I mentioned, we couldn't swing back down here, which is good, because then you're getting a better position down here, where most people are more fearful. As you can see, if you look up the Fear and Greed Index indicator, we're basically a score of 10. Extremely fearful. You can see that throughout, a couple different things, but more in the price. You just see it in the price. Obviously people are selling out now more than they were. They just weren't feeling this area, and they pushed us back down. We're just finding a double bottom here for now. I mean, that could change. We can go back down to 30. I don't see 37, 36 being as anywhere that will hold long term. If we break below 39.5, we're just going to, hit that 36 or 35 to $37,000 price range, pause for a moment, and then just keep going down. It wasn't much action in that area. You can also see the volume is week 2 down here, this section. And then we got a little bit more volume to push us up, and then we just basically found the top again. You can see the volume pulls down, selling out, and then until we found our bottom, the volume perks up, gets the push up, and then they kind of disappear, and then they start selling, driving the market down. So now we look like we're starting to position ourselves. Some people are. I mean, not everyone is. as far as on the larger scale of investor. But some of them are, and you've seen that with one wallet out there. Now, whether that was a fake out just to make the market think like 46,000 was the bottom or whatever. Hey, who knows? They're looking at the same thing we are, so maybe they felt that was the case, or it was just a fake out for everyone to kind of get in and be the cushion for them when they get in down here. So that's all I got for you today, guys. Keep your head up. Things aren't as bad as they look. I know perception can be a you know what, but all is well. Digital real estate is out. Take care of yourself.